presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 3 p.m. Eastern Time. We got markets near all-time highs. S&P's right now up by 32 points. You're right back to where we were in terms of, you're talking about going back. Those are the all-time highs, 7,036. Pretty remarkable. We have lows out there of a week ago, under 68.20. And just like that, the S&P's 200 points from where we were a week ago. We're challenging the highs, and right now we're up by 0.5%. Back to a 15-minute chart. Growth stocks, NASDAQ 100. How about this heat map for a moment? This is the S&P 500. It's the biggest equities out there. You have a few industrials, energy, and utilities. Look at the financials in the red on a day like today. Now, you got financials, and then you got the insurance companies. I don't know if I've seen that bright of a red, and that's 20%. CVS 13%. Okay, Elevance Health, 12%. Humana, 19%. Centene, 9%. Yeah, on the flip side of that, we got some earnings numbers. GM up by 9.7%. How about Micron up by 6.5%? So, the biggest equities out there. Yeah, we got some movement right now, but not in the Dow, where you got, and check out the Dow. All right, UNH. And this is where the price-weighted index, come on, where's your Dow? There it is. $300 equity, but you're talking about UNH right now, today alone, in the Dow, you were down $70. 70. Okay, you take a look at this map. Verizon trades at $40. Okay, UNH alone, twice the whole impact of that equity. We have red as well. Boeing down 2.4% on their numbers as well. Dow off by 420 points. 49,145. The Russell up by 5. The 10-year right now, 4.23%. You jump over to the dollar, and man, that's one of the stories out here. You got metal prices pushing highs, but this dollar weakness, we are breaking some critical areas. And right now, folks, okay, don't understate where we are in the dollar. The dollar has not been this weak in 4 years. Yeah. That's it. Period. End of the sentence, man. And we are making a move, and this is how you break. Okay? You have this channel line here, and that goes all the way back to 2007. And boy, if we are breaking lower right now, and we got gold and silver, we got gold at 5,000, you got silver at 110, I think that market needs to breathe a little bit. You saw how quickly it might breathe on yesterday's pullback. But on a longer-term basis, you got dollar weakness, and that run is not going to stop, man. Okay? You got silver right now. That's your weekly. It's a strong weekly bar. It's only Tuesday, and look at the volume we've done. Silver has the potential to blow it away with more volume. Remarkable. Now, eventually, I think we'll see a pullback. You want to see it on lighter volume, and I think we will. But we got strength, man. Even the last couple weeks in gold, you got a pop. You got higher volume numbers, not comparing to what we have in October. Okay? You'd like to see a little bit more pickup. But yet again, you got dollar weakness, you got metal strength, and the volume is there. You jump over to platinum. Yeah, now, a little bit of a different story, of course. Now, you have the meltdown really yesterday, okay? So platinum showing it's down 10%, but that's because the futures are closing at a number that's intraday here. It's showing it's down $278, almost $300. Okay, so the close of the session was probably somewhere around 1 o'clock, potentially futures close in platinum. If someone knows, it's probably something like that to be down, of course, almost $300 in the session. But nonetheless, platinum, you're $325 off the highs that you were at coming into yesterday. So volatility everywhere, natural gas. Look at this, we hit $7 yet again, just in the last hour. and you're back 6. Wow, look at this move, man. Whew. I think my dad used to call this thing the Widowmaker because it would just take you out because the volatility in natural gas, and you see it, folks. All right, there's nothing like that type of volatility, really. From $3 to $7.50. God bless you if you're ever short. And guess what? When you go parabolic, there's a potential they go right back down on the other side of that, of course. Okay, let's talk about these insurers, man. Let's jump over the VIX first. VIX 1609. Okay, very little fear in this market right now, just chopping around right where we were yesterday. Now, tomorrow's going to be a big day. We got a Federal Reserve decision. We get some tech earnings after the bell. You get Tesla, one of them. So that's going to be a big day when we come in. But today it's about the insurance companies. And let's kick it off with the headline. So, yeah, they're in shock, all right. Almost $100 billion in market cap wiped out. This is just at 2:45. The story's coming out. Okay, but it was out there this morning. And then what this has to do is how the rates are going to move with Medicare, okay? So the increase that they got is 0.09%. Medicare agencies propose 2027, this is next year's insurer rates, a 0.09% increase. The number that analysts were expecting was 5%. Pretty remarkable that they just didn't go zero, right? I mean, 0.09%. But boy, are these equities reacting. Now, here's how this is going to shake out, okay, is that it's not just as simple as they don't make any money. That's not how it works, okay? They're still going to try and sell insurance to Medicare, and they're going to trim the benefits that are in there, these insurance companies. That's the way this plays out, okay? And, yeah, when you talk about United Health, revenue from the Medicare line of business for UNH is twice what they take in from private insurance. This is going to be a monumental deal unless you get some kind of whiplash where we get a reversal tomorrow. It's going to be everywhere in the midterms, okay? When I had some time to really digest this, look into it this morning. And this is the playbook they're going to turn to, okay? When they look to bolster margins, enrollees might see insurers pull back some offerings, trim extra benefits, such as cash-like cards for health expenses, and offer plan designs with more cost controls, okay, such as limited network of doctors and hospitals. Yeah, and that, whew. Yeah, and it is. It's Medicare Advantage, but a lot of people have this. And that's going to be the deal. And when this happens, okay, of course it's going to become political because it's a political program. It's a governmental program. And the insurers, what are they going to do? Not only do they do that, right, but then, of course, they get the lobbying going and they get the constituents out there, okay? And man, we'll jump over to these charts when we come back. But whew. We'll take a look at it. We'll kick it off with UNH following their earnings as well. We'll come right back, folks.
On how to begin your trading journey. You've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. So this is going to become a monumental story. I mean, anytime you have the benefits that seniors are going to be getting, and so what's going to happen is they're basically going to say they're going to pay the insurers the same amount of money they paid last year from Medicare Advantage enrollees, and insurers, in turn, are going to say, we can't give you the same services for the same amount of money. And of course, there's going to be some pressures. They're not just going to make the same money they were. The battle is on. But they're going to say, we can't just give you the same services. And so what they're going to do is they're going to cut the benefits of Medicare Advantage to line up with that. Man. Now, UNH came out with their numbers as well. Okay, but you got a double whammy all over the place. You're down 20%. You're down $70 in terms of the escalation on the news last night and then on their numbers this morning. And you take a look at this thing, okay? Seems like the natural spot is to retest the lows out here. You're just going to blow through this gap that we have out here with volume from August of last year. That's your daily. You put it on the weekly. That's going to stick out as well. That low is 248, and you have volume at this low as well of 234, man. We've drifted higher. You really haven't had a sign of strength, if anything, and it's only Tuesday, and look at the volume in this equity, and you're down 20%. Okay, and the battle is on, and it should be on for UNH. I got no sympathy whatsoever, but this is going to get to be quite a deal in terms of, for lack of a better word, when this plays out before, okay, there's no lobby like the retired folks. You know, Wall Street's up there for sure. The NRA for sure. Where are they recently? Aside from that. But yeah, they are going to have, the last time this happened, they had Super Bowl ads. Okay, this is how big this is going to get. They had Super Bowl ads. Where's the part? I just wanted to, so it's going to be a lobbying arm with retirees, and the battle is going to be on. Here we go. I had to get the line because it's amazing. In the past, insurers have deployed phalanxes of anger. They're going to be in a phalanx, folks. The angry seniors are going to be in a phalanx formation. How about that one? Okay, I kid. Why not? But hey, and run large-scale ad campaigns, including a commercial during the Super Bowl. Okay? Whew. They're going to try and work to avoid a profoundly negative impact on seniors' benefits and access to care. So get ready for it. Now, here's the other side of this, okay? Is that part of what's in here, right? Part of the reason which I rail against, okay? Part of the reason for the smaller than expected proposed rate increase was a policy decision. Now, I need more on this because they sneak this in. They like bury the lead, okay? I mean, if it's just fraud, then fantastic. But there's always the devil's in the details. Tell me how this works, because shame on this. You know, this really deserved more when I say this. Part of the reason for the smaller than expected proposed rate increase was a policy decision to stop allowing payments based on patient diagnoses gathered through insurer reviews of charts if the information was not tied to a medical encounter. Okay, so they would look through people's charts and they would just, you know, create that they had such and such condition, and guess what? Medicare paid them X amount of dollars for that condition, right? Well, that's out. Such chart reviews are among the industry billing practices that have drawn scrutiny. I would put it lightly. Yeah, it is just fraud, straight out. And I don't understand how it's not, you know, usually the government, they're like the last person that you want to commit criminal fraud on, right? You know, pick a debtor, pick somebody you owe. It's never the government that you want to be, whether it's taxes or whatever it is. And somehow these insurers get away with it. That aside, I'm sure it's prevalent, okay, but it doesn't matter in the context of these equities, folks, because this is a wake-up. I mean, they put that out there like one reason is because the policy change of not allowing that anymore. Meanwhile, analysts were looking for a 5% increase, and they get nothing. Now, what's going to happen is retirees on Medicare Advantage are going to split the difference somewhere in between with the insurers, right? They're getting the same amount of money. The insurers are going to have to pay more money to provide those same services, right? Prices have gone up, folks. Inflation has gone up, right? So it's one way or the other. Either the insurers cover the extra costs to provide the same level of service that they did a year ago, or they provide less services at the same cost. And therefore, that's the split. And yeah, CVS down 15% today. That's your weekly. Look at this thing, man. Man, oh man. Some of these areas, it's been a straight shot higher. Come back and test the low of $60. We're down from almost 85 to 70 in a heartbeat. That's your weekly on CVS. Humana, oh boy, look at this. You're breaking everything on Humana. Okay, down 20% for Humana. My goodness, look at this. Yeah, this thing could be going back. I talked about this morning. On a symmetrical basis, your only saving grace is you got some strength out here at about $200. But really, you have some selling, if anything. But that's your next line in the sand, and we're there. Humana, whew. Let's look at long-term CVS. And UNH. But boy, that is the beginning of what's going to become a very big story, I imagine, folks. All right, we of course have a Federal Reserve rate decision tomorrow. Chairman Powell, market all but certain that he will not be cutting rates right now, and the market doesn't think he's going to cut by the time he's out in May. He's got 3 meetings left, 1 meeting tomorrow, and then 6 weeks in between meetings right now. You jump over that 10-year, man. You know, we're at about 4.23 right now. Let's pull that one off. Shame on me. Now I got 3 of them. But pretty remarkable. As we're coming into the potential where this market is going to start forward-looking to the next Fed chair, we may get that name any day or any week now. And meanwhile, you got the 10-year, man. You're down from 114 to below 112 over the last 3.5 months. We're pushing 4.25% right now. That's on your 10-year. Like I said, look at this dollar, man. We might get a 95 handle. We're making new lows on the dollar and 96.11. Jump over to Apple, up by 1.5% today, catching a lift. Microsoft, okay, up by 2.2. Meta shares up by 0.2%. Yeah, Micron, how about it, man? Look at this equity. Whew. It's getting a little parabolic. Micron going from $100 to $413 over the span of 5 months. Remarkable. All right, folks, we're coming back with Tim Ord. We'll be talking some indices, some equities, and some metals. We'll check it out. We're coming back with Tim. Stay tuned, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&P's up by 30 points right now. You got gold at 5,000. We just got another spike, folks, coming on the hour. So I don't know, 3 o'clock, $5,151. Look at this acceleration. And we got silver right now at 110. To talk about some of this market action, we're going to talk to Tim Ord. You can reach Tim at his website, folks, ord-oracle.com. And under the services tab at tfnn.com, Tim's got a couple great webinars. The Secret Science of Market Tops, how to identify market tops, and six secret ratios every trader should know. And as I say, we talk about a lot of those ratios here on the program. Tim Ord, good afternoon.
Yeah, good afternoon. So it's kind of we're hitting new highs on the first chart we're showing here is the monthly SPY. And we're hitting new highs here. The only thing I'm really concerned about, we had a high back in February of last year, and how that high developed, we actually dropped the volume, tested the previous high of January. This is January right here, and the volume dropped 10%. That's kind of the key percentage, 10% or greater. If you test a previous high on 10% at lighter volume or greater than 10% at lighter volume, and you close below the previous high, that shows the upside energy is weakening. And a lot of times that's where at least consolidations start, if not pullbacks in the market. And that happened again in last February. And so I'm kind of watching here. The month ends Friday. And volume's kind of light. We're actually, if you close above a previous high and higher on lighter volume, that still means you can still go higher. So you have to go above a previous high and close below the previous high and have volume drop at least 10%. So I'm kind of watching what volume's going to be this month. So it looks okay. If we close above the previous highs, I think the market still can move higher. The bottom window is the VIX. In general, we're kind of making lower lows. There's a little divergence right here. So I'm kind of watching that. But in general, I'm staying long on the S&P. Here's kind of another view. This is the VIX. Now, this is a 3-day average of the VIX on a monthly time frame. So it takes a lot of the noise out. So right now, you can see we're hitting higher highs on the VIX on a 3-month average as the S&P is hitting higher high. For some reason, if we back off into the close, say on Friday or something, and we close below last month's high, that'd be a concerning sign. But so far that has not happened, so I'm not worrying about it. So I'm staying long. You can kind of see the volume divergence right there. It backed off a little bit, but so far okay. I got another chart here. This is a monthly chart again. This is the RSI 5 of the monthly chart. And a lot of times momentum starts to weaken towards the highs. And so the RSI kind of picks up that momentum lacking. If you look at the last high we had in February of last year, the S&P's made higher highs. The RSI on a 5-month moving average made a lower high. Same thing happened in 2021. You kind of see the divergence. And here we're not doing anything. We're making higher highs, and the 5-period RSI is also making higher highs. So that's bullish. So I don't see really danger unless weird things happen here in the next couple of days. So I'm thinking we're still going to push higher here. It looks okay. Wish volume's a little bit higher, but as long as we close a new high, then that will take care of that. So I'm staying along the S&P. So that's how I say about that. But the money's being made in the gold issues this year, or actually over the last couple of years. 2 years ago, you couldn't quite tell what was going on because the market was transitioning. Even though it was going up, everybody thought it was just a minor bounce and an uptrend, come right back down again. Well, obviously that hasn't happened, and the market just keeps screaming higher here. So how long is this thing going to last? That's the good question. And I got some momentum rules all indicators. As long as momentum's up, you stay with the trade. Even though there's divergences, a lot of those times those divergences even go away, like that last one we showed on the RSI. RSI is hitting a new high, And so momentum is up, and the S&Ps are kind of creeping up, even though it's kind of scary here as far as the S&Ps is concerned. But as long as we close a new high, trend's up. So don't, of all the indicators, momentum rules all indicators. And here's a momentum indicator for the gold issues. This is GDX up down volume percent. It's a 50-day average. That's like 2.5 months of trading. Actually, it's 21 trading days in a month. So this is like 2.5 months of trading. So it's it takes a big swath of for this indicator to really, it really helps you follow the trend. It's a real good trend indicator. It gave a buy, once it closed above zero back in early 2025. And it did it here too. This is the up-down volume, and this is the advanced decline one here. So I got two different types of momentum indicators on GDX, and both of them are above zero. As long as those two indicators hold above zero, it's going to keep going higher. And normally right at the end, last time something like this big of a trend started was back in mid-2019, and it got above zero, looks like about probably May or June's in there, and stayed above zero all the way into, looks like probably September, thereabouts. So I think that was about 1.5 years. I don't know. But anyhow, it stayed above zero and kept you in the uptrend, even though this was a COVID crash right here. It still stayed long because it went down real quick and came right back up. So it didn't have a chance to flip. And, we got a bicycle on this particular indicator. It looks like, January, February, and it's still holding strong. It's plus 13, 14 right now. This indicator is plus almost 17, 18. And it's not showing any weakness, even though this thing is just screaming up until this indicator falls below zero, uptrend intact. So it's kind of look at a shorter term indicator. This is a little bit more responsive. Last time it gave a sell signal was back in, this is February of, it's probably November or something back here. Some trending over it. You can't quite tell what it is. Sure. But let's say it's November. It gave a sell signal. So the top Windows GDX, I can't quite read it what it was. Maybe 40 or so. It falls down and finally gets back above zero. I hear the music. So.
Okay. And I'm even pulling it up right now. Yeah, something like 40. November 2024, right? We're looking at there, right?
Yeah. Yeah,
that's that pullback. Okay, perfect. And can we talk? We'll tease it too. I want to talk a little about silver, of course, too, in the next segment. Okay, Tim? Because obviously people are asking this silver volatility. Folks, we're coming back with Tim Ward. Stay tuned.
All right.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. S&P's up by 31, and yeah, gold just made another move right at 3 o'clock, and it did it with some volume, Tim, man. It was an acceleration right at 3 o'clock from 5,100 up to 5,144 in that 15-minute bar, and we're at all-time highs again in gold, folks. We're talking with Tim Ord. Okay, if you want to keep going, Tim, please. I see your chart up there. We're finishing the GDX.
All right. Okay, this is the bottom window is the GDX to GLD, in other words, gold stocks to gold. You want this indicator to be rising, which it has, as long as it stays above the mid-Bollinger Band and uptrend. But what really works the best, from my experience with all these indicators, is the cumulative up-down volume for GDX. As long as that indicator stays above the mid-Bollinger Band, the uptrend's in force. I put that pink area in here when it fell below the Bollinger Band, so that's a sell signal. So it's a little bit shorter-term indicator. It doesn't exactly pick out the exact highs or lows, but it gets you pretty close. And very seldom you give, false signals. But all these, this GDX GLD ratios heading higher above mid-Bollinger Band. This is advanced decline cumulative above the mid-Bollinger Band. Again, this is the up-down volume. And even GDX on a weekly time, or this is a daily, is way above the Bollinger Band. Getting kind of stretched here. But, going to get more stretch, I guess, until these indicators fall below the mid-Bollinger Band, trends up. So how high is high? Don't know. I was out of the market for a little bit. Got back in at 75. I'm thinking, this is going to be hard to stay long. And now we're over 105, up in 100 as far as GX is concerned. And these indicators are still not even giving a warning sign that this rally's going to reverse. So, how high is high? Well, actually, there could be acceleration here going on. This is, I'll do the chart on the silver come Thursday, if that's all right.
That's perfect. I wanted to give you a little time, so that's a perfect one. I just know, silver, they're talking about in the den, of course, so that's great. We'll talk about silver more thoroughly on Thursday, folks. Perfect.
Yeah, because I got quite a few silver type things that kind of give a good deal. But anyhow, this is this middle window is the monthly XEU gold ratio. It goes back to 2002. Or actually 2001. It's been in a base. I've talked about this chart before, but it's been in a base building since 2014. And this thing, trades, breaks up, breaks down, but it's what I'm thinking is going to go on here. It's gone sideways, so basically 0.04 to 0.09, and it's going to break out of this sideways trading range, and we're right smack at 0.09 right now. Do we back off again and create a pull back to 04, or do we finally break out? Well, it's unusually long for this indicator to stay in this narrow of a range for this long a period of time. So even though it's not saying it's going to break out today, but I bet it breaks out this year. I bet it breaks out between now and summer. That's what I'm thinking, because I don't think we're going to back away from this price of the high here is again 0.09. Where it is, there it is right there, 0.09. I think we just hover here, and we're probably going to eat through this resistance of the previous highs. And once we do, you have consolidations. What comes next is impulse waves, and so this thing's been consolidated for 2014 for 12 years now. So the next thing that's going to come is an impulse wave. An impulse wave is like these straight line moves. This is an impulse wave down. It broke below these lows, and you add an impulse wave down. What I think is going to come next is an impulse wave up to the next resistance, which is basically 0.18, maybe 0.09 or 0.19, don't know. But so what does that mean? Well, it means that gold stocks way outperform gold itself, because this is a ratio between the gold stocks and gold. And so what's going to come next is an impulse wave. It's probably going to be straight up. So these gold stocks, in my opinion, are actually going to get stronger in the coming months. When that's the hard point. If we're still here 3 months from now, this 0.09 range, we're not going to back away. We're actually eating through that level, and these gold stocks are going to keep on screaming. So I think things are actually going to get better for gold stocks. I got a little bit shorter view of it here. Okay, there's a trend line coming down from the 1996 high, and we broke above that trend line. Actually, me and your dad talked about that break above that trend line, and it's going to be a robust gold stock rally. And turns out that's exactly what's happening here. And that break of that trend line came in back in 2024, early 2025, and we had just a rally up. And here's that breakout area right here. And, even though this has gone up, probably what we're going to look for is a move similar to this one. There's a lot of mirror images going on. So even though we've been creeping up here and gold stocks have been done extremely well, the reason why I think there's going to be a more robust rally coming, because after a breakout of a trading range, you have an impulse wave. And that impulse wave is going to go straight up, just like the impulse wave. This one went straight down. There's a lot of mirror images between the two. So anyhow, I think that's where we're going to go. So
I just want to jump in because it is pretty cool. I was jumping back forth, and it made me think. The run we were on, of course, from 2000, and we just keep going higher, Tim. The whole time you're talking, we're at new highs of 5160 right now, 5,160, and we started at. Of course, you go back, we were at 1,600 in 2022, but it's been almost straight line for 2 years from 2000. And my point is, imagine the XAU was still at 100 back then, which they were at 100 when you were selling gold at 2,000 an ounce, and now they're selling it at 5,100 an ounce. It's like the margins that I don't think any company was trying to run their books as in, they're up 4 times as much the companies, but it's almost like if you run any business and you run the business profitably and you're selling something at $2,000, they're getting all that money. The extra, it's just a massive amount of money. So fundamentally, I look at it and say, you could be worth more than 4 times when, if you for business owners out there yourself, right? It's like that's just, it all goes to the bottom line. They were selling a piece of metal that they dig out of the ground for $2,000, and they were making money doing that. And now that same piece of metal is over $5,000 right now, man. It's just wild. Yeah.
Yeah, but if you look at, let's get back to this chart, what that means. So again, this chart is 0.09 and it goes to 0.18. So 0.18, what does that mean? Well, if gold does not move, say it just stays at 5,000, it doesn't move a penny from here. Gold stocks, to get back to 0.18, gold stocks would actually just double.
Yeah, wow.
But,
right?
So that's without gold moving.
It would not even make sense, but that is all going to the bottom line. And guess what? What's a company worth? It's worth what you can take to the bottom line, right? And boy, when you're selling the same product for $5,000 and you were running the business 24 months ago, folks, selling it for $2,000, and then 24 months before that, Tim, they were running it, selling gold at $1,600 an ounce. Yeah. So I look at that and I'm like, wow, I cannot imagine the cash they're going to generate if gold stays at $5,000, man, for sure.
So,
Tim, great charts, man. Appreciate it as always. Look forward to talking to you on Thursday. And folks, if you have questions, shoot me an email, tommy@tfnn.com. Anything you're going to want to talk about when we talk to Tim on Thursday, we'll be talking silver as well as the markets. Tim, thanks so much. We'll talk to you Thursday, man.
All right, talk to you then. Thanks a lot.
Talk to you then. Thanks so much. We're coming right back, folks. One more segment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Look at this gold contract, folks. We are up $100 from when I was getting on the air in the last hour, and you are now up almost $200 in the last 24 hours on gold. 5,000. Look at these 30-minute bars. Let's put them back to 5 minutes. Yeah, the whole run right at 3 o'clock. Man, gold all-time highs up 1.8%. You got silver right now catching a bid, pushing highs. As in not near the 117, but you were pushing the highs of early this morning. Silver. We're up $7 almost, $6.50 from where we were at 115 this afternoon. Platinum up to 26.18, and it's the dollar's getting decimated. Okay, what's going on? What do we got? We got headlines everywhere. Yep. Okay, that's a move for you, folks. Dollar's in trouble, man. Look at this. That just happened in the last 10 minutes. And look at how, remember there was gold buying at 3 o'clock? What just happened? They bought gold And something just happened. Was this dollar yen? Where are we? All right. There's always something going on. Well, dollar yen's happening for sure. Oof. And you know what's remarkable is, okay, check this out. So I go into ChatGPT, right? And I say to ChatGPT, hey, walk me through a scenario of a company that's a gold miner that's valued at $10 billion and tell me if they're valued at $10 billion when gold's at $2,000 an ounce, tell me what kind of value they're going to have if gold goes to $5,000 an ounce, okay? And I did this in 40 seconds, folks, okay? But do you know what it told me? Yeah, it told me that guess what? At $2,000 an ounce, maybe their all-in cost is $1,200 to $1,400. They're making $800. It's all to the bottom line practically. So guess what? Yeah, their margins increase by 4.5, not 2.5, and the end result is they go from 10 billion to 70 to 90 billion. XAU's only up 4 times right now, as Tim was saying. Hey, check that out. That's it. It's 70 to 90. Do you know what that would put? That would put the XAU at about 800. Dollar weakness, folks. Dollars crashing, gold higher. Thanks so much. Have a great night.